Welcome to Markets Now. I'm Michelle Rook with Jim McCormick, agmarket.net. We're seeing mixed trading grain and livestock futures as we are post report now from USDA. And I would say, Jim, the WASDE in June, pretty benign. The one exception might have been in the wheat market. We actually did get some global adjustments we should talk about.
No doubt about it. In general, the June report tends to be a little bit lackluster. Today definitely was it, Michelle, but you're right. The USDA did lower that Russia wheat crop a little over 5 million metric tons, down close to 83 million metric tons from 88. And the real question is that just the beginning of it. There is a lot of debate of how much damage is done to this Russia wheat crop. Remember, they were dealing with a drought, and then they got hit with a frost. And the smaller that Russia wheat crop gets, the more bullish it could be for the world supply. Because remember, part of the reason why wheat prices have been struggling the last couple of years is due to this abundant supply of wheat out of Russia. So it's something we need to watch.
No doubt. So Russian crop down 5 million metric tons, Ukraine and EU both down, I think, 1.5 million. The big question now is, does it translate into export business for the U.S.? Isn't that key?
That is definitely key. In general, we haven't seen a lot of business, even though the prices went up. Our prices have come down quite a bit here recently. The other thing we need to kind of look at is what's going on in the outside market. The U.S. dollar today is really getting hit hard as this market is dealing with a surprise CPI number that showed a little bit less inflation than anticipated. The odds makers are now saying we got about a 70% chance that we'll get a rate cut in September, but not today when the Fed meets, but in September. But that has put pressure on the dollar, and that's what we really need to see. A weaker dollar is going to be bullish for the wheat as well as all commodities for that matter.
Yeah, absolutely. Ending stocks on a U.S. basis actually were slightly lower despite a little bit of an increase in wheat production, right?
Exactly. So not enough to really get the market excited, but it's in the step of the right direction. Like I said, I think demand is going to be the key. And like I said, this Russia wheat crop, if it does shrink, there will hopefully be some opportunity for some U.S. exports.
What about corn and soybeans? It looks like USDA pretty much kicked the can down the road on both.
They did. They left corn unchanged. They did make a slight adjustment to old crop beans, lowering the crush by 10 million, which kind of in line, and then they carried that forward into the new crop. So not a lot of adjustments. There was some thought that maybe they'd get a little bit aggressive, maybe lowering the South America production. I think they only lowered the Brazil crop 1 million metric tons. So for the supply bulls that were hoping for maybe a bullish surprise coming out of the USDA on the South America front, it just didn't happen for the most part.
Yeah, and I think they attributed the 1 million metric ton loss in Brazil to the flooding down there in southern Brazil. When will USDA get closer to CONAB? I know they're out tomorrow, or will they ever get out, get close?
I think they're going to get closer, but the reality is, Michelle, I think it's going to be one of those things that we're going to agree to disagree. I think there will always be a gap between the two. It's kind of the world we're in right now, but I think they will narrow up, but that's also going to keep the market guessing as to what is the total supply in the world. I think the best gauge, if you're a producer out there, you got to look and see what's going on and whom's China buying from. As China comes in and starts getting aggressive buying U.S. product, that would argue that the Brazil crop is a little bit smaller than what the Brazilians are thinking, or lower than what the USDA's thinking. Remember, China's bought, I think, 3 loads of beans here out of the last 4 days. It's all old crop, but it's definitely a step in the right direction.
Yeah, I was almost surprised that USDA didn't make any export adjustments on soybeans, but that was actually almost a good thing, wasn't it?
I think it was a good thing. I mean, long term, we do need to see the demand. Like I said, I think the dollar is critical. New crop beans, they chose to leave the demand alone, Michelle, but I think that could be a red flag. I think they've raised the demand of roughly 125 million year on year, and that seems incredibly optimistic, even though they left it alone today, to think that we're going to increase our demand that much when China has yet to buy a new crop bean. So that is definitely a red flag for the producer. You do not see China come in and buy. That probably argues beans are overvalued.
No doubt. So now we go back to trading weather and then kind of gear up for the big report, the acreage numbers at the end of the month then, right?
You got it. We're getting the first round of heat coming in the Midwest here at the end of the week. Then it backs off, and then some maps are suggesting the heat moving back into July. We'll keep an eye on that. And yes, the big number we're going to look at is this June 30th quarterly grain stock report, as well as acreage. There was a lot of debate on the acreage number there in March. I do think the corn number was a little bit low, and we'll see where it is, because it's going to be critical, because there's no doubt about it. There is some prevent plant going on right now due to the wet spring we've had in portions of the country. So yeah, that'll be the next really big USDA number out here that we'll be trading.
Yeah, the key is, as you have said, we started off with 90 million acres on corn, but was that really an accurate number to start with? And where did the 6 million acres of principal crop acres that we lost, where did they go, and do they come back, right?
You nailed it. You nailed it. Because remember, folks, the survey, when we did this, when the government does the survey in March, it's literally for the most part a producer's opinion, what he thinks he's going to do. And remember, Michelle, when they were doing that survey, March corn or December corn is trading at the lowest price it'd been in multiple years. So I think the producer is pretty negative on corn when he filled it out. I think the odds are high. We did end up planning, or they tried to plan a little bit more. But yeah, it's going to be a big number, and it'll have a big adjustment on the balance sheet because we are planting the crop a little bit late. It definitely looks like it's going to be a hot summer. If we have a little bit of lack of rain in the latter part of summer, like some of the maps are suggesting, and we take that trend yield 4 or 5 bushels lower than trend yield, and we don't find extra acres, it will tighten that balance sheet up a little bit.
Are you in the camp, Jim, where you think that we're below the 181 now on corn trendline yield, that there's no way we can achieve it with the fact that we got planted with so many different windows of time?
That's a hard question to put at, Michelle. I guess if you're going to really force me to say, I'd say the odds of hitting that trend are going to be tough, but I don't think it's below 177. I'd put it at 177 or better. I mean, the reality is June weather, late May weather is only a very small portion of the pie. When this crop is made is during pollination. Warm days, warm nights, that will have a negative impact on yield per se, but we've got a lot of water to come under this bridge. So, we still could end up with a very good crop if Mother Nature cooperates.
Okay. I guess one last question. Technically, we've had a big slide in the wheat market. Corn has actually held up pretty well in light of that. We're pretty sideways in that market. Do you think corn and soybeans can hold in these trading ranges for a while or not?
I think beans are right down here near the spring lows. If they take out these spring lows, they could slide another 20 cents near the winter lows. But I think they're probably near some value at this point. Same thing for corn. The reality is, I think the market is probably fairly priced for what we know, and then we will add or subtract weather premium as needed. Right now, with the heat coming in, I think that'll keep kind of the dip buyers in that mode, at least near term. And then as we flip into the latter part of July, if the weather's cooperating, then I think this market will work lower. If I'm looking at two crops which I think are more at risk, I'd argue beans are probably more at risk than corn. Like I said, due to the weak demand for new crop beans, that carryout, I think, could easily balloon over 500 million. And, that's not $12 beans, in my opinion. That's closer to 10, unfortunately.
Okay. Thanks so much. Jim McCormick with agmarket.net. That is Markets Now.